Thanks, Brian Mudd. This is my cheat sheet for Tuesday, July 31st. It will be a very ugly end to the year if investors actually believe we're going to go over the fiscal cliff, specifically in the stock market on capital gains and dividends. In doing some research, it's clear that investors have almost completely priced in the certainty that tax rates will not rise on capital gains and dividends. If you've wondered in part why there is such a disconnect between the stock market, which has slowly continued to rise this year, while the economy has actually seen its growth rate be halved from 3% down to 1.5%, which isn't fast enough to keep up even with the demands of a growing population and inflation in this country, it's because dividends have risen 14% so far this year. Companies have continued to pay out more, and investors have continued to look towards especially higher yielding companies, because where else am I going to put my money? Where else can I earn a yield? You certainly can't do that in fixed income. Bond markets have been bought up and there's not as much opportunity there. So stocks become more valuable at that point. We've even seen a disconnect in the face of not great performance in the second quarter. For example, only 42% of companies that have reported earnings for the second quarter actually lived up to revenue expectations. Only 42%. That's the worst since the fourth quarter of 2008, and yet the stock market continues on its merry way. If investors believe that we are going over the fiscal cliff and tax rates will rise in dividends from 15% potentially to as high as 40%, and that capital gains rates go from 15% to over 20%, you could see a mass rush of selling so that people don't get hit with higher tax rates heading into 2013. How much so? Well, I believe that if that occurred and people looked just surely at the fundamentals of the economy and companies at large, you could see a sell-off at today's levels of 24%. I see the Dow going back under 10,000 in that scenario, only happening in a very short period of time. In other words, if the investors begin to believe we're going over the fiscal cliff, it'll take the stock market with it. Speaking of dividends, I mentioned that dividends have increased 14%. That is the single biggest reason that the stock market has risen. I haven't said this in a while, and it bears repeating. Historically, 2/3 of all gains that have been earned in the stock market over the course of its history, and remember the stock market on average yields 8% compounded year after year. That's factoring in all the good and all the bad, just over 8%. 2/3 of that comes from dividends. So as dividends rise, stocks naturally are going to rise in not necessarily lockstep, but in conjunction with those rising dividends, which is what allows the stock market to be buoyant in the face of an otherwise weakening economy. Okay, so iOS or Android when you're considering a smartphone? That's really all it comes down to anymore. We just received the percentage breakdowns of smartphone activations in the United States. Get this. Android and iPhone account for 89.5% of all activated devices right now. BlackBerries, Windows operating systems, anything else still out there, only account for 10.5%. That's a dramatic decrease even just from last year for everything that's not Android or iOS. But lest anybody thinks that the iPhone 4S was a disappointing product, get this. Apple's market share of activated devices is up 10% from 23% to 33% this year, with Android dropping from 60% to 56%. And the Surface tablet. This is Microsoft's first self-manufactured device, not named the Xbox. And if you're interested in this tablet, it's going to be released the same day as Windows 8, October 26th. That is the cheat sheet for today. Plenty of other great stories on the fiscal cheat sheet, including distracted walking incidents and injuries of 400%. Will laws follow? That's the cheat sheet for today. Enjoy yours. See you tomorrow.